Good morning and welcome to the GRC International Group PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated on the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Alan Calder, CEO. Good morning to you, sir.
Good morning, and good morning, ladies and gentlemen. Thank you for being with us today. I'm going to start with a brief overview of the GRC market and talk about the GRC business model, its strategy, and then I'm going to hand you over to Chris Hartshaw, our Finance Director, to give you an update on our year-end trading update and the case for investment. So, cybersecurity has gone through a rapid evolution over the course of the last 5 years. The World Economic Forum recognized a month or two ago that cybersecurity has to be seen as a strategic business issue that impacts decision-making. It's no longer an issue simply for the IT team, it's an issue for the C-suite. The threat landscape sees increasingly sophisticated cyber criminals and serious organized crime mounting increasingly sophisticated attacks, both broadly on organizations that have weaknesses and on targets. It sees nation-state activity and cyber warfare, escalated in particular by the Russian invasion of Ukraine, and all of that exacerbated by the opportunities that come as a result of the acceleration in digitization, largely COVID accelerated, and in the migration to cloud. So ransomware, it's predicted, will attack an end device every 2 seconds by 2031, up from 11 seconds in 2021, a huge increase in the most effective and lowest cost form of cyber attack. The attack surface itself has become and will go on becoming increasingly holy. There are weaknesses and vulnerabilities in technology, in people, the fact that human beings have to interact with data, with email, and with the internet, with the World Wide Web, and vulnerabilities in processes which make opportunities available for attackers. There are vulnerabilities in supply chains and in managed service providers, which open up opportunities for cyber attackers to attack one target, and as a result of that attack to spread right the way through that, for instance, managed service providers' client base. And all of that is made easier for attackers by inadequate governance, risk management, and compliance frameworks in organizations of all sizes. Cybercrime damages are forecast to increase by 15% per annum to $10.5 trillion by 2025, up from just $3 trillion in 2015. That's a huge 10-year increase in damages across the broad range of areas in which typical cyber attacks create damages. And organizations have to worry about more than simply the attack surface and the threat landscape. They have to worry now about the compliance landscape as well across the UK, the EU, and the USA. That's becoming increasingly complex and draconian. There is the General Data Protection Regulation in its UK and EU formats, which bring potential fines for data breaches of up to 4% of global turnover. And while that kind of high level of fine hasn't been seen yet, there are nevertheless escalating levels of fine at all levels in the possible set of fines that you might experience. The Network and Information Security Directive in the UK, in the EU, and the revisions to both mean that there are increasing obligations around organizations not simply to protect personal data, but also to deliver cybersecurity and demonstrate that there are proper cybersecurity processes in place which protect the organization. And in the EU, in the United States in particular, there are legal requirements now about reporting cyber breaches as distinct from data protection breaches. The SEC is bringing in a set of requirements that all organizations report breaches within 72 hours. And that set of requirements from the SEC requires disclosures around cybersecurity incidents, but also around what level of cybersecurity risk management strategy and governance organizations have in place. On the supply side, there's a global shortage of cybersecurity and privacy professionals, with the forecast that at the moment that's sitting at about 2.7 million people. It's a fragmented market, multiple small single solution businesses able to provide one little bit of the set of requirements that organizations have, with cyber insurance becoming increasingly expensive and cyber insurance premiums going up by between 25 and 150% this year over last year, and expected to go on growing. On the buy side, buyers need cyber defense, in-depth cyber resilience. One single point solution is no longer adequate because cyber attackers will easily bypass that and get into and destroy organizational networks. Buyers need fewer, more broadly capable suppliers who can put together solutions that encompass the broad range of weaknesses that organizations have and deliver integrated solutions to them. And as a result of the shift in the threat landscape, the attack surface, the compliance requirements, the cybersecurity market is expected to grow at a 14.5% compound annual growth rates to $352 billion by 2026. GRC International Group is a governance, risk management and compliance organization. We support organizations tackling cyber resilience. Our IT governance brand is a market-leading brand with a unique cyber defense in-depth model. Our primary focus is on the people and process domains, not on technology, and we work in people and process areas that have international recognition in terms of the type of support and solution that we deploy. Our proprietary product and service offering is wide-ranging, but designed to be integrated so clients can draw on a set of solutions which give them genuine cyber defense in depth. And we have substantial proprietary intellectual property across all the areas of what we are offering our clients. We're sector agnostic. We're not providing services to one sector only. All organizations find themselves targets of cybercrime. And although the business is originally UK-based, we've got early stage businesses in the USA and in the EU. We've been there for a couple of years, so we have a growing understanding of what it takes to succeed in those regions. And we have a website in Asia Pacific, which gives us a starting point in how to operate in that area. So our business is about protecting clients, helping them comply and thrive in an increasingly complex cyber risk environment. And we organize our products and services really to provide that cyber defense in depth in three operational divisions, and I'll talk a bit more about our business model shortly. We have a software as a service division, which was responsible for about 25% of H1 2022 revenue. Obviously, we're only able to talk about the figures that we have so far reported. An e-commerce division, 26% of revenue, and services just under half of our revenue. Our services business brings us contact with clients who need support in order to tackle and deploy solutions to challenges, and give us the opportunity to introduce software as a service solutions. And we sell much of what we offer through our e-commerce offering. So we have 8 B2B e-commerce websites, learn from anywhere, training delivery model, all led by a publications business that is a specialist publisher of content, books, and tools around cybersecurity, privacy, data protection, risk, and compliance. Our software as a service business, we now have 6 different platforms at different stages of evolution, all of them built around the logic that clients need to be able to embed cybersecurity and data protection processes inside their organizations. Software as a service and e-commerce, either sold as a result of clients finding a services solution or leading to a client purchasing a service solution, but we provide the broad range of cybersecurity services, penetration testing, payment card and cloud configuration compliance, legal data protection officer services, everything built around the recognition that cybersecurity and data protection are two sides of exactly the same coin for all of our clients. The slide, which I'm going to pass over briefly, gives you a sense of the broad range of products and services that we offer, and the way in which our cyber defense in depth draws on the types of services which organizations need. And we deliver services either in a pre-planned packaged way or in a bespoke way that's designed to meet whatever a client's particular set of requirements are. But our organization is built over 20 years around the logic of deploying significant expertise in cybersecurity and data protection to give our clients the peace of mind that enables them to thrive in their own particular marketplaces. A cyber defense in-depth strategy recognizes that you need multiple lines of defense. The first line of defense is typically detective. It's about identifying attacks coming at the organization, and that means continual vulnerability scanning, looking for known vulnerabilities in internet-facing assets, making sure that staff, who is the other main area of vulnerability, are appropriately trained to recognize phishing and other emails that might lead to the download of malware, particularly ransomware, and authentication policies and procedures built around ensuring that anybody logging on to systems inside an organization can be authenticated as being allowed onto the system. The second line of defense would be preventive, and that's about penetration testing, about incident response, being able to identify there has been an incident and to escalate it in a way that enables the organization to close it down quickly before it spreads through the environment. Government standards like Cyber Essentials, which tie down specific technical security controls, and of course, appropriately security trained IT support and GDPR staff awareness training, so that you not only have general staff aware of their obligations in terms of protecting the organization from cyber attack and making sure you comply with the law, but you also have specialist staff who know how to respond to deal with incidents, who know how to build secure configurations into the organization. Your third line of defense is really about building maturity into the system. That typically involves certification to an international standard like ISO IEC 27001, a standard that's been around for 20 years. It's the ISO 9001 version of an information security management standard, and enables boards to have a set of security controls based on whatever their identified risks are, and to monitor how effective those controls are in protecting them. The fourth line of defense is also about ensuring that you build resilience into the organization. So it's about making sure that across your cyber supply chain, you identify threats. You've got an IT business recovery, incident response, disaster recovery framework, all of which ensures that the organization is able to respond to an attack in a way that enables it to trade through dealing with an attack and continue afterwards. The reality is that all organizations are going to suffer cyber breaches. There is no organization that can avoid them because the reality of being connected to the internet or receiving digital data means that there is a way in which an organization can get you. Even if you're air-gapped, even if there's no digital connection between the facility and the outside world, it is still possible, as the Israeli Secret Services demonstrated, to get malware into a secure facility and onto operating systems. Fifth line of defense is entirely about recovery. It's cybersecurity insurance. All cybersecurity insurance does is mitigate the cost of a breach. It's not an actual defense. Organizations that think that because they've got in place a chunk of £1 million or £500,000 worth of cybersecurity insurance, they're secure. They're not. If you have a breach, you still have to deal with all of the impacts and repercussions of the breach. All that your insurance does is give you some financial compensation and money to help you pay for that, but it doesn't help you deal with the reputation damage, the disruption to your business, and the reality that if you've been breached, you've probably got to spend quite a lot of money on improving security. So that's what a cyber defense in-depth strategy does. IT governance is the evolve of this concept, and we are the global market leader in delivering integrated services that provide cyber defense in depth. Our strategic focus as an organization is growing nationally and internationally, both organically and by acquisition. Investment, therefore, in software as a service and e-commerce platforms, driving client acquisition, retention, cross-selling, and high margins. Our overall growth is supported through the continued development of our services division, deploying expertise to solve client problems, which creates opportunities for software as a service deployment, and our continued investment in our own infrastructure enables us to not only improve forward revenue visibility and gross margins, but also to automate delivery of services to customers and therefore improve gross margins and improve the return on investment inside the business. As we said, the EU and US businesses are now well established. We've got significant organic and M&A growth opportunities in both regions, and we're beginning to build a business in Asia Pacific with a website operational there. Our marketing and sales funnel, coming down a little bit more detail. We've got 20 years of content marketing. We were doing content marketing before it became a thing. The first business we set up was a book publisher. It's still the leader in publishing specialist books about cybersecurity and data protection. We have ongoing, very effective PR activity. We have SEO dominance, which translates into growing volumes of incoming customers seeking specific solutions, finding our websites because they've found us on the internet. There's some data in one of the appendices which gives you an understanding of how dramatically we outperform anybody else in these markets in terms of dominating SEO search terms. They buy our books, they read our content, they come back to us for solutions to their issues. We have multiple accreditations for all of the various services that make up our cyber defense in-depth offering. So from training organizations, from cybersecurity certification organizations, and those combined with our ongoing very high net promoter scores around the quality of service clients have a high level of customer endorsements on our website, all gives customers the security of mind to purchase from us, and means that while we're able to maintain an ongoing high level of continual business, our conversion of visitors continues to be high, and over 50% of our revenue in last year was from new incoming customers. We productize services. We make it easy for clients to buy services. So something like an ISO 27001 implementation service can be purchased as a bespoke offering or as a very straightforward, standardized. You're a small business. You don't want to think about it. You just want us to come and do it for you. So for £7,500 for a small organization, we arrive, we deploy the paperwork, we make sure you have the training that you need. It's an out-of-the-box solution, but it's a packaged, productized service. We package offerings. We take a number of different services that work together, like our cyber safeguard, and we ensure they're properly integrated so a client can not have to think about which elements they want. They can simply buy a package of services which we can deploy to meet their requirements. And of course, we can do substantial bespoke offerings for our clients. So that makes it easy for customers, makes it easy for our salespeople. And we have largely automated fulfillment behind the scenes, very substantial e-commerce and automated fulfillment activity to enable our account managers to concentrate on landing inside clients and expanding our footprint. So marketing and sales model drives customers through the funnel, very big top of the funnel, very solid ongoing pipeline, an operational model where pretty well whatever the client wants to buy from us, we provide. The e-commerce division, typically the first purchase clients make from us is of a book or a toolkit or a training course, enables customers to experience our proprietary expert content, to build their own professional qualifications, to address substantial skills gaps inside their organizations. We build on that to invite customers to review services that we can offer them. And often through our services, we then lead our clients to buy software as a service solutions, which embeds the solutions inside the organization. So they have ongoing, consistent, robust, regularly updated compliance processes. So as an example of how this works, a client might do a search for ISO 27001. They'll find itgovernance.co.uk. They'll probably read a number of articles that we've published on the website about certification, what it means, how to go about it. They'll purchase a copy of the standard. We distribute ISO standards, and they'll buy a book of guidance published by our in-house publisher. They'll probably then talk to our sales team about help with implementing the standard. They will have been driven to it by a client requirement of theirs or by a security compliance obligation. And we'll make a proposition to them, typically, which will say, we can do this for you for something out of the box, which might take 3 months for a small organization to maybe 9 months for a mid-sized corporate, will cost between £7,500 and £50,000. And that project will include, obviously, consultancy-led activity, but it will also have training for the client's key team, lead implementer, lead auditor training on one of our public courses. You can do that from anywhere in the world. It will have an annual subscription to our compliance management, our risk assessment and compliance management tool that embeds risk assessment and compliance management inside the organization. They'll have an annual subscription to our documentation platform, which will give them pre-approved documents which are kept updated as standards and compliance requirements evolve. And they'll have a subscription built into that to our ongoing staff awareness training, which is again regularly updated. So all of the key elements that the organization needs to demonstrate compliance with ISO 27001 come as part of our package, whether it's off the shelf or bespoke, and that enables us clients to get a completely integrated one-stop purchase of whatever they need. Typically, an implementation is followed by an annual internal audit and support contract worth between £5,000 and £15,000, and those contracts could run for a number of years. I think our longest running contract so far is about 10 years. Typically, after implementing ISO 27001, there are a number of other directions a client might go over the course of the next few years. Cyber Essentials certification, particularly if they have a government contract or they see the benefit of technical security controls. We have a Cyber Essentials certification service. It's the government IASME scheme. They might do SOC 2 or PCI accreditation, depending on whether those are requirements of their customers or if you're processing payment cards of the bank through which you process cards. Our consultancy teams are appropriately certified and accredited to do that. You might buy an annual penetration testing contract where we have our ethical hackers logging on to your websites or other internet-facing assets or internally, trying to look for vulnerabilities, identifying how they could be exploited. You might turn to us for support with privacy compliance. We have a data protection officer as a service offering, which enables you to, through our in-house law company, enables you on an annual basis to know that you're getting completely compliant data protection officer services. You might want to implement other management systems like privacy or business continuity. There might be additional staff training. They're all the areas in which, because we have such a wide-ranging set of services, clients can move from an initial implementation, and why we have clients returning to us year after year and buying from us on a regular basis. Another example of how upsell works, a client who comes to us, they've done Cyber Essentials, can very easily upsell to what we call Cyber Safeguard, is a service we've just launched. And Cyber Safeguard is a package of services available from our website, so vulnerability scans, incident response, staff awareness training. It's pre-packaged. If you buy Cyber Safeguards, you've got a Cyber Essential certification. It brings with it embedded cyber insurance put together through a leading insurance provider in the space of up to £500,000. And that means you're getting really solid for a small or a mid-sized organization cyber insurance at a price that you couldn't afford to buy it from in the marketplace, knowing that you're probably not going to need to draw on it because what you've got is an integrated, pretty comprehensive, out-of-the-box cyber defense in-depth solution. I'm going to hand you over now to Chris Hartshorn, who's going to, against that background, talk you through how things looked at the end of our last financial year. Chris.
Thanks, Alan. So we're in a slightly difficult position at the moment in the sense that we haven't yet released our full year-end results. And so we are slightly restricted in terms of the amount of detail we can give for FY22. Nevertheless, we did release an FY22 year-end trading update a few weeks ago. And so it's worth pulling out some of the highlights from that update. Our billings for the financial year were up 21% to 14.8 million, up from 12.2 million in the prior year. Our Q4 billings were up 25% to 4.5 million. Notably, our March 22 billings were the highest since the end of our GDPR peak period back in May 18, and that's despite everything that's going on in the economy right now. Remember, when we talk about billings, we are talking about the value of invoices raised to clients and cash sales through our website, and that's before any accounting adjustments for accrued and deferred income that are required in order to recognize revenue. Our FY22 billings from recurring revenue products accounted for 56% of the total billings during the year. That's up 2% from 54% in the prior year. Our recurring revenue subscriber base is up 41% to 5,089 customers, up from 3,600 at the end of FY21. And that's significantly improved given that we only released some of those subscription products, or almost all of those subscription products, a couple of years ago. 57% of our transactions during the year were from returning customers. That's up from 45% in the prior year, a reflection of both the increased number of long-term contracts and subscription services that we're offering, and also a reflection of the increased value that we're putting on customer relationships and longer-term customer relationships, starting to look at complete customer life cycles. Our H2 revenue growth continued in line with the progress that we made in H1. Our Q4 revenue will not be less than 4 million, and that's up 14% on Q4 of FY21 at 3.5 million. Full year EBITDA will be a positive at least 0.8 million, swinging from a loss of 1.1 million in the prior year. We had a strong year-end cash position of £2 million, up from 0.2 million at the end of the prior year. And that reflected not just the successful share placing from January 2022, but also an exceptionally strong February and March trading performance and cash performance. Looking at some of the things that have happened since the year end, again, we're slightly restricted in terms of how much detail we can give on current trading. Our full annual report will, of course, include some more detail on outlook, and from that, you'll be able to gauge what this year has looked like so far. But in terms of pulling out a couple of the things that we have already talked about publicly, in terms of this year's performance to date, we have already signed a significant multi-year PCI contract. Now, that wasn't necessarily significant enough or material enough to require its own regulatory RNS statement. Nevertheless, it is of a size and of a value and length that we would consider towards the top end of what has historically been normal for the business. We also signed up our first client to our newly launched cloud security consultancy service. Winning some of these longer term contracts is now driving the expansion of the business into and our global footprint of both across both the USA and the EU. These things, combined with a number of other contract wins in the first part of the year, represent a strong start for the technical security business within GRC, and that's considered a strategically important part of the group. The services division overall, including the technical security businesses, is now starting to see a notable shift away from being a cyclical business. Historically, we have always seen a very, very strong link between macroeconomic performance and the performance of GRCI businesses. We're starting to see that less and less, and there seems to be a growing recognition that cybersecurity and defending against cyber breaches is a core part of doing business, and it's no longer being seen as a discretional spend or a grudge purchase, which is perhaps where it's sat in the past. In the first 7 weeks of the new financial year, the total value of customer contracts won in our technical security business was up 107% on the same period a year ago. So what does all this mean in terms of an investment case for GRC? Well, in order for there to be an investment case, there obviously needs to be a clear strategy. GRC has that. We've talked about this already in the presentation. The strategy is to exploit a fast-growing and fragmented international market. There are significant market opportunities and drivers out there at the moment. There's an increased complexity of the digital technology being used. There is an increasing use of cloud technology by businesses. All of that increases the level of vulnerability. Add to that the increased use of hybrid working environments and more people logging on to work networks from outside of the traditional office environment. The market is a fragmented market, and that in itself offers significant consolidation opportunity. The cybersecurity market as a whole is forecast to grow to £352 billion by 2026. At a compound annual growth rate of 14.5%. So what's GRC's position and USP against that backdrop? Well, as Alan's touched on earlier, we have an established and respected market-leading brand in the form of IT governance. That brand has been around now for some 20 years. We've got an experienced and resilient group-wide management team. Some of our key people have been with us now for a number of years, and they've gained significant experience during that time. We've got a broad customer base across multiple segments and across multiple organization sizes, and a dominant SEO positioning in terms of our website performance. With 4.3 million visits to our website during the year, that's up 18% on the prior year. We offer what we believe is a unique cyber defense in-depth offering to customers. We've got a wide range of products and services which are designed to fit together to form an integrated overall solution. That in itself provides significant upselling opportunities for all of our marketing and sales people. We've got unique and valuable intellectual property. Everything that we've done has been built within the business. Our software, our content, our brands are all owned by us. There is clear quality demonstrated throughout our products, and that's demonstrated by a number of national and international accreditations, not to mention a number of customer endorsements. We've also got an established work from home and remote working model that enables us to recruit the right people for the right roles, irrespective of their geographic locations. There are more and more people looking for remote working, looking for flexible working opportunities. And we as a business have been doing this for a number of years. It's not something that we introduced as a response to COVID, like many companies have. We have now been running this model for a significant length of time. And the idea of people working from home, working remotely, working across the world is just normal business for GRC. In terms of the financial investment case, as we've said, we are seeing an increasing shift towards us being a non-cyclical business. We've had significant revenue growth with increased recurring revenue, already up to 56% of our total billings. We're EBITDA positive. Gross margin is already at 58%. And with a highly scalable SaaS and e-commerce division, that should bring inherent operational gearing, which we'd expect to see improve that gross margin over time. We're cash generative, and combined with being EBITDA positive, that means that there is a fundamental level of investment in business growth, investment in improving our products and services, which is not reliant on outside funding. Outside funding will inherently play a part in our M&A activity in the coming years and in specific investment projects, but there is an ongoing part of the investment which is funded by our own working capital. There are in the presentation a number of appendices. There's some detail about the management team. There's some more detail about the various brands, various companies within the group. There is a bit more detail about operational divisions, and there is some H1 detailed financial information. None of that I'm proposing to necessarily go through at this stage. The presentation will be made publicly available on our website following this session. But for now, I would like to hand you back to the presenters to kick off any Q&A session.
Alan, Chris, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated in the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed by your investor dashboard. Alan, Chris, as you can see, we've received a number of questions throughout today's presentation, and thank you to all the investors for submitting those. Could I just ask you to read out those questions and give responses where it is appropriate to do so, and I'll pick up from you at the end.
Sure. So the first question is, you reference growth through organic means and through acquisitions. What does the pipeline look like? What are you looking for, and how would acquisitions be funded? And they are two different strategies, organic growth and acquisitions. Each has the element of adding products and services to our offering, as well as adding clients to our target base. For us, in each of the areas that we're interested, there is the choice between, is this a business we could more effectively start and grow ourselves, or is this a business where it's better for us to seek to acquire something where most of the pain in establishment has already been experienced. So we have a forward plan around organic growth. We have a history of agile product development. We have a plan stretching over the course of the next 12 months around specific products or services that we intend to launch. We launched, for instance, our cloud security configuration service at the beginning of April. That's beginning to get established. And we have a pipeline of potential acquisitions. We're clear about the areas in which we're interested in acquiring businesses in the short and in the medium term. We have a number of conversations which are live, but with all acquisitions, as I'm sure everybody would be aware, it's about finding the right kind of fit from a business and management perspective, as much as it is about finding the right price. And so while we have an active pipeline and we're actively adding to the pipeline, we're not yet at a point where we can talk in much more detail about what comes out the other end. But that's going on. We have, as Chris said, in terms of the question about how would that be funded, we have a chunk of cash on the balance sheet. We have some facilities. We would be looking at initial acquisitions funded through a combination of cash on payment or cash on completion and deferred payments, and shares, potentially loans. We're kind of interested in whatever the payment options are that will work best for our clients, but which will ensure that our shareholders' investment is maximally benefited. The board still has significant shareholders on it, so we're as interested as are our external shareholders in how we acquire companies in ways that ensures that shareholder investment returns are maximized. Chris, do you want to add anything to that answer to the first question?
No, I think you've pretty much covered it, haven't you, in terms of answers to that particular question?
Okay. So geographically, where do we see the greatest growth opportunities for GRC? In many ways, the UK is the most advanced market where dealing with the people and process aspects of cybersecurity are concerned. We expect to see significant growth here. The government has a well-developed, integrated approach to cybersecurity. But the US is a huge market. It has a flexibility and speed of activity and an outsourced compliance model, which is really interesting. So we see the US as having a much longer term potential than the UK because of the size. The EU is a more challenging market because it's, in spite of being 27 different member states, there are a number of languages, there are a number of regional level jurisdictional requirements, but there are nevertheless laws which apply across the whole of the EU, like the Network and Information Security Directive, like EU GDPR. And we see the EU market, therefore, as being a bit more challenging because of the range of languages and lower level jurisdictional requirements, but also a very long-term growth area. So in terms of our existing markets, in 3 years' time, I would expect to see the US significantly larger than our UK business, the EU probably a bit bigger than our EU business, but I would also expect to see substantial growth in the Asia-Pacific region over that time. Around the Asia-Pacific rim, there are more and more countries shifting towards GDPR-like data protection requirements. Cybersecurity requirements are being turned into regulation. India, for instance, has just passed a set of laws which are very draconian in terms of cybersecurity. What enforcement looks like is a key issue for us, but we see Asia Pacific in 3 or 4 years' time as being, out of those 4 regions, 4th probably, but nevertheless growing extremely quickly. Australia, New Zealand, the Philippines, Southeast Asia, all of those markets very significant. We're not necessarily thinking of China or Russia as being markets for us. We do think that there is likely to be some kind of a geopolitical split from a cybersecurity perspective between what you might say is the kind of China, Russia, Iran, North Korea grouping and the rest of the world. How that works out, of course, we'll have to see. But we're expecting to see our growth in the markets which are threatened, if you like, by that Russia, China, North Korea, Iran axis. Central America, South America, we should see that growth coming out of the US business. So pretty well everywhere. But as I said, United States, then the EU, then UK, then Asia Pacific is roughly how we see it in 3 to 4 years' time. Are there gaps in our product offering? Yes, there are. Of course there are. This is a world in which compliance requirements and attacks are changing very rapidly. So we could, on 1 month, go, gosh, we've got everything covered. And then 2 months later, we find that there is something else that clients need. So we continue to look quite a long way ahead in terms of what's happening around compliance requirements and around the evolution of threats, what the attack surface looks like. We develop products and services to meet that. As I said in my answer to the first question, we've got a number of areas where we are expecting to launch products or services over the course of the next couple of years, or certainly the next year. And there are a number of areas where we're looking specifically to buy businesses that will bring us a startup a capability that means we don't have to go through the pain of that. And typically those will be in areas where building a business requires a chunk of capital investment, quite a long time to get processes established, and where clients tend to sign up for long-term contracts, and where if we can get the right kind of price, give opportunities for management to, in the acquired business, to see growth opportunities for themselves inside GRC, those kind of businesses we'd like to bring into the group as well. How do we ensure our home workers have appropriate cybersecurity to protect their engagement with clients? And that's a question, of course, that every organization with home-based people should be really asking themselves. In our case, we've migrated, we did this some 3 years ago, accelerated the final elements of it through COVID-19 when we deployed everybody out of the office to the home environment. We've migrated virtually everything into the cloud. So everything that we do is delivered in cloud services. We know how to configure our cloud services, so we're securely configured in the cloud. The log on to all of our services comes through a single sign-on. Obviously, there are some services which are not yet, don't have single sign-on available, but single sign-on. We use multi-factor authentication. So all of the kind of things that we can do to ensure that effectively home-based staff are logging on securely, we do. We also provide our staff with their own kit. So with the exception of a small number of developers for whom we have a different solution, we provide the equipment. So we manage the software that's on their equipment. Where people want to use their own devices, they use them on our mobile device management platform. So we're able to control the software that is on individual devices. if somebody downloads something onto an individual device that shouldn't be there, there's few people who are in a position to do that. We will identify it very quickly and we can deal with it. Our incident response team is fast. We've architected our network so that it's difficult for malware to spread through the network. And we have a set of processes around securing data, which have been in place for a long time around encryption, client file security, and so on. So in the light of our risk assessment, which is supported by, I think now, our third recertification to ISO 27001 and about our fifth or sixth to Cyber Essentials, we've got security processes which are really solid and robust around remote working. We've had remote workers, as Chris said, for years, but really robust security processes around remote working and protecting our clients. Can you tell us more about your US business? What percentage of revenue is it currently and the potential going forward? Current percentage of revenue is running at somewhere around about 5% of revenue, between 5 and 10% of revenue. Revenue is still quite up and down, depending on whether we sign a big contract or not. But the growth strategy for the US is fundamentally about the building ISO 27001 relationships. ISO 27001 is a huge growth area in the US because it enables organizations to demonstrate that they've taken appropriate steps to protect themselves. That's necessary if you're facing a class action lawsuit or you're facing an action from under the SEC regulations. So our primary focus is ISO 27001. We do a lot of work through our websites. We have rapidly growing traffic, pushing up by between 20 and 40% on a monthly basis through our US website that converts into, our tried and established model. People find our website, consume our content, buy a book, go on a training course, come to us for help. We put together a package of services. So we just simply replicate the model in the US that worked for us in the UK. And because we're delivering remotely across the US, we can deliver to any state. We're not linked, we're not restricted by the cost of travel. And the US is a very digitally aware area, so it's very straightforward for us to do that kind of work, both in terms of training delivery, consultancy delivery, and also the digital awareness means that the preparedness to use digital solutions through our software as a service division is well established in the US. APAC growth strategy is the next question. Follows exactly the same model. So we start off with a website which we've had established, running for a couple of years now. It's designed simply to grow a presence. For us, launching a website is not necessarily the first step to instant revenue. You need to build web presence, you need to grow links, you need to grow traffic, you need to have people coming onto the website to download data. So we're about to go through a process of updating the website now, bringing the e-commerce functionality forward a big chunk, making a broader range of locally focused services available on the Asia Pacific website. We're looking at now positioning delivery services in Asia Pacific. We have a growing number of clients in the EU, the UK, and the US who need services delivered in Asia Pacific, and our ability to deliver seamlessly globally is a key part of why mid and global 1,000 companies buy from us. So Asia Pacific growth strategy will follow exactly the same process as in the US, as we did in the UK, made slightly easier by the fact that than in the EU, then pretty well English is the common language of business across Asia Pacific. Japan's a different case. There are very specific standards that there are in Japan. And we're building partnerships with organizations who have similar interests, but who aren't offering competing services or complementary services in each of those markets. And we expect to see those helping us drive growth over the course of the next few years. So that's answering, I hope, the APAC growth strategy question. When did we raise cash? Last year. Actually, it was this year. I think it was in February. Chris, this is probably a question for you. You will have the data at your fingertip.
I do, yes. So we raised £3 million gross, of which after fees we received approximately 2.7. And it was in January this year. The relevant announcements went out across the 17th and 18th of January, being the announcement of the placing, and then on the subsequent day, the results of the placing.
Great, thank you. We've done a great job in terms of making the business more efficient through automation. How much more potential is there for automation-led efficiencies? Very significant potential. While we've automated significantly everything that happens immediately after transactions on our website, we've got a high level of automation through into our accounting and CRM systems. There are a number of other services where we're still developing the platforms, we're still developing the automation, but we think we should be able to drive increased sales at a ratio of billings to full-time equivalent employees that improves on a year-to-year basis. So we currently run at about between £7,500 and £8,000 a month in billings per FTE. We expect to see that improve up towards £8,500, £9,500, £10,000 per month over the next few years. And certainly as we effectively automate in the UK, we deploy that automation into our other regions. It means that we open those businesses with far less human involvement than we needed to have in the UK, which means that the benefits accrue very rapidly across the group. When we're pitching for new business, who do you usually pitch against? Well, that kind of depends on which product, which service, which division. There are a number of competitors who have endpoint solutions. We've usually understood what those endpoint solutions are. We make sure we compete with those endpoint solutions. So if it's a risk management platform, we've looked at whatever else might be in the market, and we compete against that, and we'll compete usually in terms of capability, competence, knowledge, professionalism, all of those kind of, we do it better stuff. When we're looking at consultancy, we tend to be competing both against small consultants at the bottom end of the market, where our pitch around professionalism level, our professional indemnity insurance tends to win the day, or against people like PwC, Deloitte, EY, where our pitch about deploying people who genuinely have experience, who've got the right level of grey hair and who've been doing it for a long time, combined with our deep knowledge of what we do, our genuine professional expertise, means we tend to win fairly substantially. So we compete against everybody who's in the market. We have, we think, a significantly good win ratio in terms of who we compete against. Isn't use of BYOD regarded as quite risky, even with an MDM solution? There are risks around BYOD. Unquestionably, the issue with any good cybersecurity implementation is to understand what the risks are and put in place appropriate mitigating controls. We don't have many of our staff using their own devices. As I said, our preferred route in most instances is we issue staff with devices, whether they're desktops or laptops or mobile phones, because that gives us absolute control, but we still manage them on our own MDM platform. But where people do use their own devices, and some of our associates do, then we manage those through our platform. We limit what they can access. We limit what data they can get to. So we think we manage risk to a level which is acceptable from our point of view. And, the key thing, and we say this to all of our clients, is that managing cyber risk in today's environment is not about eliminating risk. You can't do that without going and operating in a lead safe at the bottom of the Marianas Trench. You have to accept there is risk. It's about managing risk down to an acceptable level, and we think that we do that reasonably well. More color on our combined cyber training and cyber insurance offer. How is the insurance part of this offering delivered? How long has the product been in the market? How quickly has we grown? How big is the opportunity? So our cyber safeguard product was launched at the beginning of at the end of May, at the beginning of June. It's brand new in the market. It's been a number of months in development and in trial with customers. It works on the basis that we have a established insurer, Hamilton Insurance. They're a well-known insurer in the market, and their offering is embedded in a set of services which with Hamilton we've agreed is the set of services which will reduce their exposure very substantially. So we're not an insurance broker. We don't have to comply with FCA regulations or anything. The client, if they buy one of our cyber safeguard offerings, that's bronze, silver, or gold, and as long as they basically say, yes, they're doing the things which like any insurance product, they're doing the things which they should be doing, then the insurance will automatically click in. If there is a breach and it turns out in forensic investigation they're not doing that, they would have invalidated their insurance. But what should happen is the fact that they are complying with, they've deployed the training, they're Cyber Essentials certified, they've done the staff awareness training, they're doing continual vulnerability scanning, they've got a proper incident response process, should mean that their need to draw on cybersecurity insurance is very limited. Because while there's a breach, the breach will be contained, the response will be quick and immediate, and therefore the exposure of the insurer won't be that substantial. We think the market is very substantial. We have, as a Cyber Essentials certification body, we have something in the order of 5,500 or 6,000 clients who are certified to Cyber Essentials through us. That's obviously our first target market. While IASME doesn't publish data on the total number of Cyber Essentials certified companies in the UK, we think it's running well into the hundreds of thousands by now. That's our second target market. Cyber Essentials really only deals with technical security controls. It doesn't deal with doesn't provide continual vulnerability scanning. It doesn't give staff who are capable of dealing with cyber breaches. So we think it's a huge potential market for us. We'll see what happens over the course of the next few months and years. I think probably this is going to be our final question. It looks as though we're coming up to the hour. Is M&A a key part of the growth strategy? If so, what would it be like to acquire new products or solutions or to leapfrog in the US APAC? So I'm assuming that's a question about US and EU. Our first step is to get ourselves into a position where we can buy from a position of some strength, where we have enough of an understanding of how the delivery of services in those markets work. We think we're getting there in the US. We think we're getting there in the EU. We're very leery of the possibility to get it wrong, to have somebody tell us that this is how you do business in this market, and we spend money and find out that we just got conned. So we've been working quite hard over the last couple of years at making sure we genuinely understand what successful business in those markets looks like. We're going to do some more organic growth through this year in the US and the EU. We'll be looking to acquisition in the EU and US more next year than this year. This year is much more about acquisitive growth in the UK. And if we buy a UK business with operations in the US, EU, Asia Pacific, that's great. We'll take advantage of that. But our focus for this year is the UK, unless, as I said, something really opportune and exciting and well priced comes along outside our primary focus for M&A is the UK, and I think that's pretty well it. So I'm going to hand you back to our good friends at Investor Meet Company.
Alan, Chris, thank you very much for that. I think you actually managed to address every question from the investors, and of course, the company will review all questions submitted today and will publish their response on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Alan, could I just ask you for a few closing comments?
Yes, of course. 20 years in growth, establishing what we think is a really dominant position in the UK in terms of an integrated cyber defense offering, huge capability around product development, innovation, agility, huge opportunities for us in the market. We think the next 12 to 36 months are going to be particularly exciting in a market where cyber criminals and nation state attacks are plying their trade irrespective of what the economic cycle looks like. In fact, they see downturns in the economic cycle as better opportunities for themselves. And so from an investment point of view, getting involved in a business like GRC at a point where its growth is driven against economic cycles is an exciting thing to be doing. Thank you.
Alan, Chris, thank you very much for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of GRC International Group PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.